When I decided to build Dfns, what was interesting to me was not just to cater for what was at the time the most mature use case, crypto trading, but to enable any builders, any organization wanted to leverage blockchain to not have to restart with the basic, which was, okay, wallets. How do I secure my keys? How do I connect to the chain, right? And so when we built Dfns, we built a solution that was very much API first, security minded and security obsessed, I would say, but API first. So banks did not have to, rebuild their whole vault and wallet infrastructure. So exchanges that were born after 2021 did not have to rebuild that piece of infrastructure. That was one, very important and sensitive, right? And two, very time consuming and also in terms of operations, quite expensive. We were also very, conscious that if that was not done right in the space, we would be losing a lot of time, right? It was a bit of, if everybody was going to put users and investors' assets at risk, we would do one step forward, two steps backwards.
Hi, everyone. I am Pelle Braendgaard. I'm the CEO and one of the co-founders of Notabene. I'm joined today by Clarisse, the CEO and co-founder of Dfns.
Thank you very much for having me, Pelle.
This is the first of a new set of talks about the modernization of the digital asset ecosystem. And probably in the beginning, we're going to be talking a lot about stablecoins, but there's a lot more to digital assets than trading and stablecoins. So hopefully we can talk with a lot of interesting people in the future about that. But I wanted to start today by introducing our guest, Clarisse, a good friend of mine. We've known each other for a while, and I was super excited when we partnered together this year. Please, Clarisse, tell us a little bit about yourself and Dfns.
Thank you so much, Pelle, and thank you very much for thinking of me for this first edition. I'm excited. I co-founded 5 years ago, a company called Dfns. We're a wallet infrastructure provider. We are mostly targeting financial institutions. So we've been building now for 5 years, and we've built a solution that enables custody solutions, payment, tokenization, and trading. So these are the 4 use cases that we're mostly focusing on, equipping company from the Zodiac custody of this world to Stripe, to Broadridge, and others. So we've been very excited about how the past 18 months has been turning out, because building for the traditional finance was not as eventful, so that's in a nutshell a few words about me and about Dfns.
Excellent. And what convinced you guys to go after institutions and not regular crypto native retail companies?
So I think it's a bit about my personal background. So I spent about 10 years in banking, started at Goldman Sachs in equity research, moved to wealth management, did a lot of different roles within the banks. And actually, the first time I got to understand blockchain technology was while I was a banker and working still in export and trade finance at the time. And so we were looking at the blockchain technology and how it could, make trade finance processes more optimal, faster, less manual. From that time on, I just, started looking at the space, stayed very close to it. And so when a friend told me to start building a remittance application back in 2015, I was like, okay, this sounds fun. Didn't leave my job at the time, but jumped on the project. Was very hard to beat anything really in 2015. Smart contracts were barely out on Ethereum. Use cases were really not mature. But that was always my angle, right? So how blockchain can improve finance, how blockchain can improve the way we transfer values, we transfer money. Fast forward, when I decided to build Dfns, what was interesting to me was not just to cater for what was at the time the most mature use case, crypto trading, but to enable any builders, any organization wanted to leverage blockchain to not have to restart with the basic, which was, okay, wallets. How do I secure my keys? How do I connect to the chain, right? And so when we built Dfns, we built a solution that was very much API first, security minded and security obsessed, I would say, but API first. So banks did not have to, rebuild their own vault and wallet infrastructure. So exchanges that were born about 2020 after 2021 did not have to rebuild that piece of infrastructure. That was one very important and sensitive, right? And two, very time consuming, and also in terms of operations, quite expensive. We were also very, I think, conscious that if that was not done right in the space, we would be losing a lot of time, right? It was a bit of, if everybody was going to put users and investors' assets at risk, we would do one step forward, two steps backwards. So all in, we've been thinking about traditional finance and institutions since day one. I think we were smart, or we were well advised not to go and sell to them since day one, because use cases were not as mature as they are today. But yes, this has been always for us a conviction that blockchain was first and foremost a back-end revolution for finance.
Excellent. Yeah, I mean, it's funny how it matches also kind of my background and history. Also, I was also working I think back in 2015 on a remittance application for crypto as well. And
which countries?
So I was in LATAM then. Before then, I was doing Kipuchi, which was a Bitcoin wallet for sub-Saharan Africa, and we were infamous for the first company to get shut off from M-Pesa, and the first to be pulled in to explain Bitcoin to the Central Bank of Kenya, who were very, very nice, by the way. And I've learned since that regulators are actually great companies to get, not companies, great people to get to know and build a relationship with from that experience many, many years ago.
For sure.
And I share, and Notabene shares also, that idea that really we need to get traditional finance on this. And I'd say actually many of the real benefits of crypto and blockchains actually are seen more once people get over a few hurdles, right? By the banking side. One of our investors told us once that no one in the regular crypto world kind of knows how the sausage is made in traditional finance, which means that they don't actually see how important it is as a back-end infrastructure, which is both funny and true.
Worrisome, no?
But so you're probably seeing some of the same issues that we have. Like, we have a lot of companies that are very crypto native, and we may have more than you do because we've really been trying to build a global ecosystem at Notabene. But people in traditional finance and then the crypto people, they talk completely different languages at some point. I assume you have experienced that. Like, how have you addressed that?
100%. And I think we're still thinking about it, and it's still a work in progress. And especially with over the past year, we've seen new players, new fintechs, mostly PSPs, payment provider, entering the space to leverage stablecoin rails to power cross-border transaction or global payroll use cases. And I think what has been very interesting is when you talk to people that did not have that innovation team within their organization and were not educated on blockchain, when you mention a wallet, that triggers so much confusion. You start with just the word wallets, and you end up with two reality that are completely different, right? The wallet for a payment provider is the digital wallet you have in your Apple Pay, right? That's what a wallet is. It's not a blockchain account. We were talking about account, right, in traditional world. So yeah, so we've been thinking we go back and forth between, we need to translate everything for this industry, and we need to make sure that not only we convey the risk in the right terms, the specificities of the technology, and we also I think are deep believers that with this technology, a lot of the traditional rails are going to disappear over time, right? And maybe there's no so many difference between a wallet and a blockchain account. And they are both wallets. They have different reality today, but they are meant to converge, right? And they are meant to be the same thing in 5 to 10 years from now. So this is a subject that we bring up often, right? We work a lot on documentation. We work a lot on content. And as we talk to players that are, touching blockchain for the first time, we like to explain in terms that they understand. But we do think that adopting the terminology of blockchain and of, at the end of the day, players that are scaling, that are becoming industry standards as well, makes sense, and that we should not create two silos, but that a wallet is a wallet, and that's what a wallet is in blockchain, right? And so we're a wallet infrastructure provider. We're not an account, a blockchain account provider, right? So that's definitely an interesting point. I feel it goes back to education, right? And the fact that when I started in 2020, I thought amazing. Education has been made by my competitors already, by all the providers that have been scaling, the exchanges, the crypto exchanges. And what you realize is that as we are advancing, and as new use cases are becoming more mature, you need to renew the way you educate, and there's new people to educate, right? And so this is now, especially on payment use cases, it's a big part of our sales motion. And that first education phase and translating what is traditional use case into blockchain, both from a terminology and a payment flow, is crucial if you want people to actually understand, remove a lot of preconception, and just apprehend a technology that at the end of the day is supposed to make things easier, faster, more efficient.
Yes, actually, yeah. So traditional payments, there's a messaging layer, which, for example, is Swift or Visa or MasterCard as well. They have messaging layers that handle important metadata around a payment, including travel rule information, but also additional information, and it helps company manage risk and then ultimately authorize the transaction. So for Swift transactions, they are then settled sometimes a few days later, sometimes much, much later. And that's also the same way. Like a Visa MasterCard transaction is instantly authorized, but the settlement can take a long time after. I think one of the unique aspects that we have in crypto and blockchain is that we can settle things immediately. And that also, I think, ties to a translation where people from the crypto space, they actually think payment is just that settlement part of it. But both of them are really important. And that's one of these translation areas that we sometimes see. But people coming from banking, they completely, yes, of course we need that, right? That part of it.
And you've seen, because this is something that when we started building, we were thinking, okay, how do we make our payload compatible with Swift, right? This was the first product design when we were thinking about payments use cases. But you're absolutely right. What we've seen over the past years is that the crypto industry is sometimes literally exchanging messages off chain, settling obviously on chain, but settling information, right? Using phone, using messaging, etc., which is not embedded into the transaction. And so, have you seen the limits of these use cases on pure crypto use cases? Because to me, the convergence makes a ton of sense. Now the payment use cases are scaling, and we're not going to be able to do without, right? There's a reason why it exists, is because we need both, and it's also why we are so excited to be obviously a part of the new release that Notabene is doing in the coming weeks. But yeah, I'm very curious to see whether you've seen as well that demand coming from the crypto startups.
So I think one of the issues that we've seen is a lot of the maybe older retail exchanges, they don't necessarily see the need for it that much, because people moving funds back and forth between wallets and exchanges. And for that particular use case, frankly, they don't really need it. I mean, there's a regulatory requirement for them to do it, aka the travel rule, but there's not a lot of other good business reasons for it. And as a CEO of a travel rule company, I agree with them. It doesn't make sense for that, except for the regulatory part of it for risk management purposes. However, what we are seeing more in the institutional front, that there's a lot more interest in it, because now you need to have, to take a trade, for example, you need to be able to hold one asset in custody one place, hold the other asset in custody somewhere else, decide on a price, and then settle both at the same time, right? And you didn't need that in the past. Like if you just had everything at a single trading venue, everything in custody at one of the large, one of the top 5 exchanges, we won't mention names here, you don't need that. But institutional players, as you know, they're not happy about that, because that's massive counterparty risk, right? So for that, there's a lot of interest as well in the messaging component for it. And there's a lot more we can do as an industry from there. And as a matter of fact, with things like Canton Network, these are direct use cases that people are extremely interested in, and they can't just be done over blockchain on their own. Yeah.
And it's very interesting because we've seen that as well. And I tend to believe that that there's going to be still 2 or 3 phases of adoption in front of us. But the next one, as we're seeing institutions coming in the space, I think one thing that these users, clients, prospects are telling us is, don't change too much, right? There are processes today. They work this way, and we want to be able to, improve, but marginally improve, step by step, right? And so, if you arrive with an operational process that is completely different from what you have today, then you don't even know where to start, right? And so, we've built a bit of product like that on our side with a lot of modularity, and with the conviction that banks have known and have been managing secrets, private keys for years, and that we're not going to come in 2025 and tell them this is how you should do it, right? They've been doing that before. They know how to do it. What they want is to enhance whatever operations they have on-prem with blockchain capabilities, right? And so we always think when we put on a new feature that will have implication into the ops of our clients, how do we make sure that the change is minimal? And how do we make sure that we improve while plugging into existing infrastructure? And I think this is where it's really, come back to what you were saying, which is, things have been working this way, and we need to make sure that these players that are used to obviously being able to settle and exchange information at the same time to manage complex trades are still doing it the same way. So we've been reaching the same conclusions, and I think this phase might last for a bit, right? If we want these players to come into the space, we're going to have to make things easier, and we're going to have to make sure that the change is incremental.
Mm-hmm. Yeah, exactly, and it's exactly the same that we've been seeing as well on our side. Funny, there's also now you see sometimes with a lot of the crypto native who've been around for let's say 10 years or so. In many cases, they build up their own processes that are not built around some of these newer requirements and technologies, and they actually are in some cases struggling more with some of these new requirements, whether it's business requirements, societal requirements, regulatory requirements, technological changes, than a lot of the banks that I see or traditional PSPs who actually are used to operating around, in a changing world, but also with these specific processes and requirements.
Yeah, for sure. And you were mentioning Kenton, and I think the reason why we've been trying to get involved quite early on with this network on our side and to provide support there is because it was a bit of a no-brainer that you would need privacy if you wanted to, take at scale wholesale payment use cases, right? There's no way you can do that on public chain. And I think there's obviously a famous story of Coinbase paying its suppliers, right, on Base, and suppliers being able to see the terms, right?
Yeah.
That they give to others, right? And so obviously this doesn't scale the way we would want to be if we want those use cases to first be powered on-chain. And I think that's what the digital assets team also been realizing and building over the years is a settlement network that combine, right, that ability to ensure privacy at the transaction level, settling with the global synchronizer on another layer, right? So we've been very much once again trying to find power, support any technology that would facilitate the adoption of blockchain at large, right? And this has been very much in everything we've been doing on the roadmap for the past 5 years.
Yeah. And actually tying into that, then there's been a recent spurry of new layer ones, of course, also layer twos over the last couple of years that companies have built out to solve some very specific business requirements that they have. Like, what do you think about that part of it?
Yeah, it's a good question. Will there be blockchains specialized in specific use cases, and you're going to have a few growing and concentrating most of the exchanging within these use cases? It's very possible, because at the end of the day, payment is very different from trading, and it's very different from tokenizing assets. And so at the protocol layer, you need features that would embed privacy, that can embed travel route, that can embed KYC, KYB features, ID verification. Today we were in touch with a chain that is about to launch called Concordium, where one of the use cases they'll be looking at is more high risk use case, because you can embed the ID and the possibility to see whether someone is of age before or at the settlement level, right? So to me, it makes a ton of sense that the protocol dictate features that being outcoded ensure the fact that those features cannot be trespassed, are implemented, etc., etc. So I do believe that it makes a ton of sense that there's not only one blockchain, and there's blockchain per use case. There are blockchains per type of companies as well. Having said that, I do believe that from a utility standpoint, a token economic standpoint, we're going to see some consolidation, because there's only so much, even though a lot of foundations have endless money, but there's only so much you can do without usage on your blockchain. And that, the same way we've seen consolidation in our space on other sectors, we'll see it in the blockchain. One usage gets lower, our foundation starts running out of money. But the big trends that I've seen is obviously wanted higher speed, higher throughput. Privacy is the hot topic, and we've seen either players wanted to add a layer on top. Is it an additive layer on top of any public chain that will enable you to make a transaction confidential? It's not privacy first, it's make a transaction confidential. Does it happen at the protocol layer? I do think that the protocol, the impact of having designed a blockchain with specific features embedding the protocol makes a ton of difference at scale.
Yeah, I agree. We also work very closely with Concordium, by the way, and they've been a great partner over the years for us. And really, we're thinking through many of these aspects a long time before a lot of the new layer ones that are coming in trying to solve it now. So it's been great being part of that story. And I also think that it is, as you're saying, like having private transactions. It's not just about, I mean, obviously we don't want customer PII on a blockchain. But as you mentioned before, it's not good necessarily being able to see the terms, the payment terms and payment flows for businesses. Businesses don't want that, right? And I actually think this is a something that I used to say slightly jokingly, but I think is also still true. To actually have real privacy on blockchains, you need institutions. Because institutions are used to do this, and then they can settle things across blockchains as part of their omnibus. And you can't really track an individual blockchain transaction to a specific user or business, a customer on that particular front. And when it comes to more privacy preserving transactions, because it's not all institutions that actually want their transaction flow to be seen either on chain, right? And I was at recently at a great little private conference with law enforcement in European law enforcement, and a lot of the whole subject was privacy enhancing technology. And you know what? There's no pushback from anyone against it, as long as there are tools that individual institutions can use to manage their flow. They are. And travel rule is one of those technologies that you can use for doing that, because it's private between the two institutions, and the companies can go in, the institutions can go in and manage risk and provide law enforcement reports if they have to, etc. And there was general kind of understanding about this from law enforcement that it is a requirement. So very often, I think if you look at crypto Twitter or crypto X, I guess it's called now, law enforcement want to look at everything. Everything needs to be surveilled. It's actually not true. And financial institutions, they also don't want to be surveilled, right? Like publicly on a blockchain.
But it's funny because I always say sometimes our industry wants to reinvent the wheel, but those problems have been, faced, not all solved, by the way, but at least faced and understood in traditional finance for years. But you're right, over the past 15 years, there's been that tension between the need to provide transparency to regulation while, being GDPR compliant, right? And how do you do both? How do you ensure both? And I do believe I think that's what's interesting is when you build a new protocol or you build a new solution thinking about traditional finance use cases that have scaled, that have faced the limits. And when you think, okay, now how do I embed that and pretty much take it the extra mile? You actually putting on the market a solution that is ready to scale adoption. Otherwise, it's just another mountain to face in order to go back to basics, understand why it will not work by talking to the same institutions, and then have to rebuild with them in mind, for sure.
Yeah, and that also kind of ties a little bit to security, because there's privacy and there's security also, like in security of funds is a very important issue, of course, in crypto. I mean, I remember the good old days where you left money in an exchange and
there was nothing the next
2 weeks later, gone, right?
Yeah,
it was just regular in the if you were following the old Bitcoin mailing list, happened all the time. And that's why it's also really important for companies who don't necessarily have their own security requirements to go in and use defense, for example, on that particular area. And I know you guys have been working on some very innovative functionality over the year, and also working with the community on that part of it, which if you'd like to explain a little bit more about that.
No, but I always say we're a cybersecurity first company. So everything we build, every feature we launch, we launch it with security in mind. It goes from or maybe let me take a step back. I think when we talk about blockchain, the first thing that comes to mind is a new set of threats, right? A new threat model, new set of threats. What is blockchain bringing? The truth is that blockchain is bringing a new technology and new threats, mostly around, smart contract, how you secure them, how you audit them, etc. This is completely new. Competence is being built, and there's actually very interesting technology that is being developed and adapted to blockchain to make sure we can really predict the weaknesses of a smart contract. Having said that, what we always like to say is that the most common threat that exists in traditional finance still exists in the blockchain space. So, for instance, corporate security has been at the center of every single regulator audits for the past 30 years, right? You want to be regulated in any country, the regulator will ask you to go through certain policies to actually go through audit through third-party auditors and make sure that all the processes you've put internally, all your internal controls are in place, audited frequently, etc. And so what was very puzzling when we started building a defense is, for instance, to see that almost none of our competition or industry had done this type of audits, which once again is, the number one step you take when you're actually building a PSP, a fintech, any regulated service in traditional finance. So we always say, don't forget the basic. Corporate security is of the utmost importance. We strongly believe that with good corporate security, the safe hack would not have happened, and that most of it is not a new blockchain threat, right? But is actually good old basic corporate security that was not applied. So that's kind of the foundation. And so when we build defense, we built it with that in mind, which we need to start from places, once again, that are very well known and make sure we don't build something that doesn't have its foundation. Place one, so being audited by first-tier auditor that have that are like Deloitte, KPMG on SOC 2 Type 2, on ISO 27001, 17, 18, you name it, and really going depth about it, right? So that's the first step. Second step, it was about trying to master a technology that we thought was one of the most secure for the digital asset space. So we've been building a product based on multi-party computation technology. We've actually decided from day one to own our own cryptography, to open source it, because we deeply believe that the most common denominator between a developer, a single developer, and a large banking institution is that they want to be able to know what's inside of your product. So it's auditability and transparency. And so as soon as we've designed we've implemented, our MPC algorithm, we decided to open source it. Later on, we've open sourced it through the Linux Foundation to give it more visibility for this type of institutions. And so that's kind of the second layer, making sure that from A to Z, you have ownership over your technology stack. You know how it's secure, you know how it's built. You've chosen which language in which it's built to be also able to increase the security. So we've implemented everything in Rust on our side. And that's kind of the second part, right? The third layer is about making sure that when we build features that are going to keep our clients safe, right? So how do we make sure that a client doesn't double spend when they make a transaction, etc.? So that's more product features that are always, it's not just about, sending a transaction, but sending it in the safest way. And last, I would say something that is also very important to us is that, once again, I go back to it, but it's that modularity of our technology, making sure that we can integrate with, for instance, an HSM that has already been audited, that already has a DRP in place, right? And we don't reinvent the wheel. Our clients have already know how to manage and maintain some HSMs. They have them on-prem. Let's just connect and have a new partition and connect to whatever they have in place. So making sure that we don't change too much. And that's at every single level, whether it's at the user level or the operator level. It's a lot about making sure we maintain that security experience. That thing doesn't change too much. Blockchain comes with a very new set of user experience, but the way you're going to implement the technology, that security experience doesn't have to be, at the end of the day, human errors is the biggest threat. So we don't put humans in a situation that is uncomfortable. And so I'll finish here. So for instance, when we decided to, how we would authenticate into our platform, into our wallets and transaction, when we decided upon implementing passkeys back in 2022, we thought that was the best security experience we could offer for financial use cases, because it was very much of an Apple Pay for pre-crypto, right? You scan your face, you generate a wallet, you scan your face, you sign a transaction. You put your user in comfort. They've been using, their Chase app, their banking app, doing exactly the same way. And so by doing that, you reduce the risk of behavior that could be dangerous for the user, for the corporation that you're dealing with. It was a little bit here, but that's my topic.
Amazing. So you're not requiring banks to store 12 words in there on a piece of paper.
Banks, no, of course not. But banks go a step further, because they're telling us we already have our authentication system in place, so connect with those, right? So, and which makes sense. Once again, that's already secured. The keys are secured. They want what's in the middle.
Thanks so much. So right before we come to the end of this call, I also wanted to talk about, we launched our partnership and integration earlier this year, and I'd love to hear it from your words. Why did you guys go forward with that integration?
Of course. So we focus on 4 different use cases. The 2 main for which we build our roadmap, they are custody and payment. So payment is very important for us. Actually, our first customer who has ever built anything on Dfns is Nidos, which is today a cross-border payment platform, mostly leveraging between Africa and Europe, etc. So over the years, we've scaled with PSPs, we've scaled on cross-border use case, on global payroll, on remittance use cases, and making sure that our platform is ready for these players is one of our most important, right? Our roadmap is designed for those 2 use cases, and those are the 2 use cases that are of the highest priority for Dfns. When we look at payment use cases, we looked at, beginning of the year, we sat down with our head of product and like, okay, how do we make sure that platform is useful for those PSPs? What do they need? Okay, so they need potentially yield for the asset that is not in movement. They need potentially off-ramping capabilities, on-ramping capabilities. So that's kind of, money at rest. How do you on-ramp? How do you off-ramp? All that has been in motion. And then you go 1 layer down, right? And the layer down is, okay, now how do we make sure those clients can safely settle and transact between merchants and their platform? And this is where you come to place, right? Which is, how do we organize the settlement in the safest way possible? And by the way, I also forgot that before doing that, we actually obviously integrated AML provider, such as Notabene for the travel rule, right? So that was very much making sure those third-party integration were in place. Because yes, now going to what we're building today, it was very important that we make sure those settlement could happen in such a way that would enable new use cases. How do you make sure that you can have you can pool a payment, right? And then suddenly you have a vendor and a counterparty and a PSPs. How do you make sure that they can pretty much do whatever they're doing today in traditional finance, leveraging blockchain, and go all the way to the use case, and not just be that thin layer of the stablecoin sandwich, which is, okay, now I've optimized that space, but really complete the entire path leveraging blockchain. And for us, the messaging layer is crucial. as I told you, this was one of the first items we had in our roadmap back in 2021, which is, okay, how do we need to connect to Swift? How are people going to exchange messages if we don't, right? So how do we make our payload compatible? And so when you reach out to say, hey, Clarisse, we're launching something, I think it's going to be of interest, it was definitely of interest. And we were also very pleased to see that among that first cohort, there were definitely friendly faces and clients. And so we know that it was a need in the market and that we needed to definitely go fast forward and be part of the first cohorts to launch with you that messaging layer.
Excellent. Thanks so much, Clarisse. And thanks for jumping on this call. I can't wait till next time we see each other. Yeah.
Thank you so much for having me, Pelle. Good day.
Thanks, Clarisse.